Hello and welcome to the Of Interest podcast. I'm Gareth Vaughan from interest.co.nz. It's now 10 years since the Anti-Money Laundering and Countering Financing of Terrorism Act, or AML-CFT Act, took effect in New Zealand, and that was some 4 years after it was passed by Parliament. It may have been a slow burner getting going, but its impact across society over the past decade has been significant. That's perhaps not surprising when the police describe businesses operating in the financial, legal, property and high-value goods markets as being at the front line for countering illicit activity in New Zealand, while describing themselves, law enforcement, as the last line of defence against money laundering and terrorism financing. Given it's been with us for a decade now, it feels like a good opportunity to put a spotlight on the AML-CFT Act. Where did it come from? What problems was it designed to tackle? How has it evolved? Is it possible to measure the extent to which it has stopped money laundering and terrorism financing? How significant are the requirements on businesses and individuals to comply with the Act? And can it be improved? To discuss all this and more, I'm joined by barrister Gary Hughes. Gary chairs the AML and Sanctions Experts Committee at the International Bar Association and is one of New Zealand's most experienced AML lawyers. Gary, welcome to the Of Interest podcast and thanks for joining us. Perhaps you could just start off by telling us a little bit about what you do in this area.
Yeah, morning, Gareth. Thanks so much for the invitation to join you in the pod. I guess I was struck by your comment that it's 10 years old. To me, it feels longer, and it is. I tend to think of this whole regulatory regime as a bit of a moody adolescent now, with all the good and bad there. So I, in my legal practice, do a range of regulatory areas. So sometimes I might be dealing with the Commerce Commission or with the Privacy Commission or the Financial Markets Authority. So different areas there, but over the last, 15 years almost, the biggest growth in my work has been around financial crime and AML, and that involves dealing, as you know, with three different supervisors typically, and also with the police. So I work across those areas, the International Bar Association thing you mentioned, and I've had the good fortune to compare notes with a lot of people overseas through different bodies. So I'm involved in a compliance professional group called ACAMS. I led their New Zealand program for about a decade, and I'm an advisory director on their Australasian board. I've had the good fortune to be invited as an expert with a Canadian Commission into Money Laundering in 2021. So you get to see how other parts of the world are dealing with the same problems, and as we'll probably come to, all tracing to the same international recommendations. So that's sort of a flavour of where I'm at and how I got into this. I first came across it when I was working in England, like a lot of young professionals, on an OE there for about 4 or 5 years, and came back to New Zealand, and it was like, well, what is this thing called money laundering? New Zealand was basically, in disbelief that it even happened. That was something far-flung that took place in America, right? So we were at a real simplistic starting point, and that would have been around 2005, 2006, I guess, when I first started to take an interest. At that time, the ministry was looking to reform the law. So, and that in itself took several years. As you know, the Act came through finally in 2009. So that's why I think of it as, this has been like a 15-year project in the making. Yeah,
absolutely. It certainly has. So I guess, a good place to start in terms of looking at it is, why was the AML-CFT enacted? I mean, where did the impetus for it come from? And to what extent was it from overseas?
It was to a considerable extent from overseas. So this world is full of acronyms, so forgive me if I say something and don't explain it, but the FATF, the Financial Action Task Force, once described as the most powerful international body you've never heard of. They are an attachment to the OECD, and they set the global norms or standards for what countries should be doing. And a lot of bodies out there in different fields will set a standard or recommendation and just leave it. But these guys have an evaluation process. So they go around and check on countries every 5 to 10 years on how they're doing and put out a detailed report on it. So New Zealand was facing that kind of report in 2008, 2009, and we were going to get a bad mark based on our existing law back then. So there was certainly a degree of international pressure. I think, though, there's also considerable local issues behind it. We had a law, a form of basic law back then that was pretty much ineffective. Most people didn't know about it, let alone understand what it was trying to do. So there was recognition, even in the 2000s, that there were growing problems with drug dealing and methamphetamine that the police couldn't keep up with alone. They needed the private sector's support and help in a more rigorous way. So there were local issues, there was international pressure, and then I think the tipping point was probably the GFC, coming along in 2008, the recession that followed in 2009. You saw a whole bunch of our financial regulatory systems back then found to be, not really stepping up when there was a crisis, and this was an area, one of many, that was identified for reform. So you saw a whole lot of things come in that period.
So what were the specific aims and expectations of the Act when it came in?
Yeah, so I think there were some legal expectations, and in a more cultural sense, I think it was a step forward around New Zealanders' complacency, maybe a bit of ignorance, as I said, sort of disbelief that this happened in New Zealand. So what it was designed to do was really to support the police by creating the climate in the business community that would make it harder for money laundering to take place without them knowing or being complicit in it, but also to create a structure where they would properly start to understand these issues and identify the right things and then report them on to police. And so it needed to shift the landscape to make it more effective, but really to give that line of intelligence and data to the police so they can get on and do their job in various ways. And I'll sort of come back to that, if you like, in a few minutes. But really it was to move us, a step change was needed from the old ineffective law, and to place some new obligations on businesses that they hadn't had before. And, other countries were also being urged to step up. So Australia got a law like this a couple of years ahead of us in 2006. So there was a little bit of pressure there to, come into line with these growing international standards.
And, how did the Act change the AML landscape?
Yeah, a very significant change, but like you mentioned, a bit of a slow burner. It took several years for people to understand it and then start to work with it. If I come back a step, big picture for a minute, I always encourage people to see this as not just the anti-money laundering regulation in isolation, but it's kind of one part of a three-part picture, or maybe three legs to the stool, if you like. The first part of that is actually the criminal law, so the crimes of money laundering. And essentially, as people probably have a working understanding, that is anything you do that might deal with the proceeds of crime. So it's focused on crimes that generate a profit. That could be anything almost, fraud, corruption, burglary, receiving and fencing goods, whatever, things that generate a profit. And so you have criminal laws around dealing with those proceeds or assets or any kind of property, and that's the money laundering offence in particular in the Crimes Act. But what changed was not just the bringing in the business community to support that and give the evidence and intelligence to take more of those prosecutions under the Crimes Act, but a very important part was actually the asset recovery law that came along with it. So that's our Criminal Proceeds Recovery Act. And I encourage people to see that and the AML law as two sides of the same coin, really. They came through in the very same term at the end of 2009 in Parliament, so they were passed into law almost at the same time. The big change there was that it enables the police to go out and freeze and eventually seize, confiscate assets in various ways without necessarily yet having a criminal conviction. So there's different tests in there depending on what kind of order they're seeking, but essentially they can, if they've got the right evidence and information, go to a judge without notice and get an order in secret and then go and serve it on various people who might hold properties, bank accounts, whatever, and freeze those assets while they then trundle through a criminal law process. The point of giving you that background is that people see the AML Act as just a business regulatory problem and a compliance burden, and yes it is, but it's actually instrumental in getting the data and the evidence that police need so that they can go about the other jobs. So when you see, as people do on the front page of the newspaper or in the interest website every month, there's a gang bust or something with people freezing Harley Davidsons and Lamborghinis and six
there's always a Lamborghini.
Pieces of real estate. Yeah, I know. There's the bling, but there's also the property, the real estate, the bank accounts, all the other things. So whenever you see a seizure like that, you might say, well done, cops, that's good police work. But chances are, I'd almost bet there is going to be intelligence from the banks and the business community that's fed into that. And that comes through the AML regime. That gives them really the ammunition to fire under the Criminal Proceeds Recovery Act.
So there's also, it's the AML CFT Act, so the countering the financing of terrorism side of it. We talk and hear less about that in New Zealand, and maybe that's a good thing. Hopefully we don't have so much of that going on. But to what extent has that been a significant factor in this regime in New Zealand?
It is growing, and you're right. We are fortunate we haven't had too many issues with that. But if I go back to the international level, the FATF, the global body, they've really evolved quite a long way at different points in time. Initially in the 2000s, it was actually established in 1989. We were an early supporter from about 91 onwards. But initially it was focused on the American kind of war on drugs, cocaine, Mexican cartels, things like that. And it still is, to a great degree about that. But that was its early focus. Then after, September 11, the focus shifted in a big way. That was sort of groundbreaking with so many different legal measures. But the focus on Al-Qaeda and others and the period after 9/11 shifted heavily into terrorism efforts and the financing and funding that supports those. New Zealand was, mostly kind of insulated from that, but part of the problem was we weren't keeping up with the law changes and the measures that other countries who were more exposed to terrorism were putting in. And so that was a significant evolution. And then, now it's evolving even further beyond drugs and terrorism into things like proliferation, financing for nuclear weapons and rogue states, and heavy overlap with sanctions, Russia sanctions and other things. And I think that will continue because if realistically the United Nations is almost a broken model, given one or two people on its Security Council with rights of veto, then you're going to find other kind of international bodies like the FATF stepping up and leading in areas like cybercrime, sanctions, beneficial ownership issues, all those sort of things as well.
Yeah. And obviously the Act itself was extended in, I think from memory, about 2018, 2019 to bring in real estate agents, lawyers, conveyancers, accountants. How's this bedded in, and are there likely to be any further extensions?
It's been quite a change, but it was always anticipated, even back in 2009, that there would be a tranche 2 or phase 2. It was seen at that time as too significant, too extensive a step, and so it would be delayed. The impetus really to bring it in was, as is often the way, a bit of a crisis in Parliament at that stage around disclosures in the Panama Papers. New Zealand being kind of branded a tax haven and things that you and I have written about on shell company abuse and our company's register and things. So that created a little bit of pressure to get on and introduce all these other sectors. One of the challenges, though, is that that's a very diverse bunch of professional groups. They're very different to a bank or a casino or a finance company or a money remittance business. So that's what we talk about as the sort of phase 1 entities that were already covered from mid-2013 onwards. So when they changed it in 2017, changed the law, it actually moved fairly rapidly given how different a law firm or a real estate agent or an accounting firm culture and business model can be. So they staggered it over about 2.5 years. But regrettably, the law wasn't largely tailored and modified to make the obligations more meaningful for what goes on in those firms as opposed to a bank. So we were kind of still stuck with a model largely based on how the banks work, and even down to things like references that came from the SWIFT international payments mechanism, and trying to apply that to what goes on through a trust account holding deposits for a real estate company. It leads to all sorts of issues. So I think your question about bedding in, it has bedded in. It's had to, and we're now at the point where Professional groups are starting to face enforcement activity. They've had a few public warnings, people being named in shame for not being compliant, and the days are probably increasingly numbered before we see one of those firms sued. But the bidding in process has been difficult, and I don't think we're there yet. I still think there's a lot of confusion and difficulty in making these obligations the right size for small firms.
Yeah, we'll come on to that soon. I think that's a really interesting area. Before we do, a couple of things. I guess one of the ideas that I sort of throw around sometimes is in terms of the primary objective of the AML-CFT Act to meet international obligations or to materially and substantially improve New Zealand's ability to detect and prosecute and prevent serious crime, or is it a combination of both?
I think it is the composite of those things, and there are some trade-offs and a bit of compromise required. But even down to the way the law is written, it has a purpose statement at the very start of it, and that's quite important because, for instance, that's what judges will use as a guide when they look at interpreting things. So that includes the statement that it's there to detect and deter money laundering and financing of terrorism. And so an important thing to understand there is it's not ambitious enough to say we need to stop it, stamp it out, and it's probably unrealistic. So they want the business community support in detecting it, picking it up, identifying when there could be money laundering going on through their products and their systems, and then reporting it, basically. And so that is to give, as I say, the line of intelligence for the police to do their thing. So there's no obligation, for instance, to freeze or stop a transaction. There might be other sort of legal reasons or commercial reasons why a firm would choose to do that, but the AML law doesn't say identify money laundering and then stop it, freeze it and hold the transaction. Some countries adopt that approach, incidentally, but we haven't. So we are focused on that deterrence aspect. And if people know that almost every commercial deal or business place they go to, they're going to have to produce identification, they're going to have to answer some questions, they're going to be run through background checks. You're going to carry your passport if you open a bank account, if you go to a lawyer for a conveyancing transaction, if you want to set up a trust. All these things become a bit more commonplace, and although some people are still frustrated by it, once you get used to it, it is a bit of a deterrent effect, because those who are looking to hide all those issues and don't want you to know exactly what they're up to will have to move around and find other paths of least resistance. So, there is the international aspect, certainly, to maintain and enhance our reputation and our standing, and there's also a line in there about contributing to public confidence in the financial system, which, as I mentioned, was important after the GFC. So all of those things come together. I think it's a mix of local and international objectives, really.
Okay. And one of the questions that always comes up is it possible to measure the extent to which it has or is preventing money laundering and or the financing of terrorism?
So we do have considerable difficulty in getting reliable measures. I've seen, as you have, numbers bandied around about what the extent of financial crime or money laundering is, and I think the police figure for a while was 1.35, 1.4. It's now realised, I think, billion. Sorry, yeah. We're talking a lot of money either way. I think that's now escalated. I think the more recent figure is something like an estimate of 1.7, 1.8 billion a year in drugs and fraud. And if you look at what's happening, the last 12 months, fraud must be higher than that already. But then overall, there's broader figures of, maybe up to 5 billion of criminal activity, if you include tax evasion and all sorts of other things, anything that generates, as I say, a profit from criminal activity. That figure, I think, was over a several year period, maybe up to, 5 to 10 years, a $5 billion problem. I personally think that all sounds great, but it's I take those numbers with a little bit of a grain of salt, because the reality is this is trying to measure a sector that goes out of its way to disguise what it is doing. It wants to stay hidden. It's a black market sort of part of the economy. So getting reliable figures is very difficult, and I get a bit grumpy when people line up those numbers and use them for different purposes, whether to say the regime is great or the problem is huge or you're not doing enough, do more. I mean, I think you've got to be careful about that. There's no doubt is a large problem, and you can see that when you look around us, ram raids and stuff that's happening in the community. That's a part of maybe, teenage idiots being involved, but it's also got some organised crime links. Stealing to order and burglary rings and things are still there. Drugs and methamphetamine problems are not under control by any means. So the problem is very large, however you want to measure it. But whether we can reliably measure it, and then how much money do you want to invest and spend in tackling it is the next great challenge, of course.
Yeah, absolutely. And we do often hear about, as you've already alluded, that this area, the AML CFT Act, as a compliance burden to the business community. How intense is it, from your understanding, as a compliance burden?
On the burden side, well, look, it is definitely onerous. And it depends on what approach you take to that. People say, it's too costly and, it's a handbrake on business. And yes, it is partly, but equally some of those businesses, if you look at the banking sector, are making enormous profits and have very good information that I would think, well, why shouldn't they be forced to actually use some of that and pass on the intelligence to support the law enforcement efforts? I don't think you can take all the cream out of the economy and not offer something back. What are those numbers? It's hard to, again, get detailed data. People tend to keep that fairly sensitive. I can recall being at a function, I think it was probably around 2012, 2013, when the law was coming in, and somebody in the banking, senior sort of banking executive was boasting that how they think the four main banks at that stage had probably spent $200 million to get established and get the system up and running. They could leverage a little bit off what had already been done in Australia, but other entities around the place couldn't. More recently, we've got the Ministry of Justice has done a big statutory review project for the 10th year anniversary, effectively, but that's still ongoing. They came up with some numbers which I think are probably more reliable and current, that this regime is probably costing New Zealand around $260 million a year, and the bulk of that is on the private sector. So maybe I think the estimate was $246 million out of that, and then for the public sector running the police and the law enforcement parts, that's maybe $14 to $15 million. So it is a significant cost. But then we see evidence all around us that it is, at least anecdotally, helping tackle the problem. So where you sit on the spectrum of whether it's worth it or whether we could or should reduce that cost, it probably goes hand in hand with your approach to whether we need to get tougher on crime or not.
Yeah. Another question that comes up sometimes is, looking at the compliance side of it, is the regime outcomes focused enough? What's your view on that?
In terms of outcomes, what do you mean?
I guess in terms of preventing money laundering and financing of terrorism.
Yeah.
And we've already discussed how it can be tricky to actually measure how much money laundering is stopped.
Yeah. No, that's a very fair question, and I think it's a bit debatable. Parts of the system, like I described with the criminal proceeds, the asset recovery seizures, they're very focused on outcomes, and that's probably the most public visible end of it. The police financial intelligence unit and the asset recovery units, the money laundering unit, they've now got all those people are very focused on outcomes, convictions, and stripping out really the profits of crime in different ways. Then the challenge you've got with the AML regime is that is essentially a very complex, big regulatory net to catch private business and force them to support the cause and provide information and do various things. And so that's the part that I think outcomes and whether it's effective is a bit more debatable. We do see some things where it certainly helps, and the reporting is part of that. We do see other things in the regulatory system where, the supervisors, DIA, Reserve Bank, FMA, they go about things in their own way, but sometimes it feels like some of those measures are not particularly driven at a sensible outcome, but just going through the compliance process and the requirements in the Act almost for the sake of it. So we talk a lot in this kind of world about the risk-based approach, which is really a way of assessing what is the main risk, the most important priority risks of money laundering or crime going on through a business. And each business should know that or should spend some time thinking about it. that is on the basis that they know their own business and how it could be misused better than the government agencies do. But what we see sometimes is that this risk-based approach gets a bit lost or maybe even perverted in the process. And so people, to give it meaning, because it's a little bit broad and wide and waffly and different potentially for each sector, or if not each firm in each industry, because of that, people try to obviously put compliance frameworks and processes, controls and policies around it, and they need to. But some of those get a little bit caught up and lose sight of the wood for all the trees that's going on. They lose the forest because of these many trees of compliance steps they're trying to achieve.
So one of the things that fascinates me about this area is the suspicious activity and transaction reports. So these are filed. I mean, I know the big entities that file them, the banks and the remittance service providers, but other businesses too, obviously. Where do they all go and what becomes of them? And I mean, how many of them are there? Because there are lots, aren't there?
There are lots, and we have some figures on that. The police FIU is certainly pretty good at reporting almost monthly now. So if I just pull up some here, this is from, June earlier this year. So during that month, there was a total of 1,321 reports coming in to the police FIU. Obviously from a different range of sectors, so the vast majority of those are from banks and money remitters, so they would relate to international payments, a lot of them. So that's 992 from a bank during that month, not a bank, the banking sector, sorry. And then money remittance, 204. Others like, lawyers, phase 2, and that could include trust and company secretarial providers, financial advisors even. They're much reduced, so I think there was about 13 in that month. And quite a few from cryptocurrency providers as well. So, the virtual asset industry is captured by the regime, and that's a good thing. And the ones that are in New Zealand actually, to the extent they've survived the crypto winter, are doing a pretty good job of it. So there were 24, for instance, from cryptocurrency entities. So that just gives you a flavour of a random month, and extrapolate that over a year. There's a lot of intelligence coming through, information to the police. The harder thing to see from the outside is what they do with it. And the reason is, of course, it's really cloaked in secrecy. They need to work on operations silently and with stealth, and they take that intelligence, they put it together with a whole range of other sources, and then they look to see, right, does this lead to a report we disseminate to some other agency? Is this a benefit fraud case, so we send it off to MSD? Is this a tax evasion matter? Is this a fraud? So they will engage other agencies. I think of them as like the central repository, and they spread the word and the information, the evidence really out to whoever needs it. That may end up in a criminal proceeds action, freezing some real estate or whatever, or it may end up in charges being laid, or it may just sit there because there's not quite enough information yet to put all the pieces together in the jigsaw, and then a year later another report about the same business or same customer comes in from a totally different field, and suddenly you go, right, there's a little bit more to the jigsaw. It is hard because of that secrecy element to convey what's going on and to give people a sense of it. And that will continue even once charges are laid, of course, because they can't come and lay out all the allegations and the evidence ahead of the trial. And so we've got a justice system that is struggling to cope, but is doing a pretty good job with the resources it has. But those trials might take months, if not years. And so nothing can really be made terribly public for fear of prejudicing that. You don't want an offender to be getting away or on a mistrial or something because too much information has come out too early. So that, I get that is frustrating for people. They don't often see the visible sides of it. But one of the fun things I do each year is work with the police on a major conference we run in Wellington. It's coming up in November again. And some of their best insights then are drawn from past cases. Once something's come to trial, people have been found guilty or not, and then sentenced, they're usually much more free to talk about those and the lessons learned. And so there are insights that filter through to the financial community in that way, but maybe not to the general public.
Obviously, we have an election looming on the rapidly approaching horizon, only about 6 weeks away now, I think. And interestingly, National's Commerce and Consumer Affairs spokesman Andrew Bailey has talked pretty generically, from what I've seen so far, about looking at the AML CFT legislation, outcomes and regulatory regime and how they work. And Acts leader David Seymour's also talked about, I guess, trying to lessen the compliance burden on business just generically. And I would emphasise I haven't seen any specific proposals from either of those parties, but there does seem to be a bit of a idea there that maybe we could make this all a bit easier for people. So I'd just be interested to see what your thoughts are on trying to make it a bit easier for people to comply with, whilst obviously not putting at risk our international commitments.
Yeah, that's right. I haven't seen what Andrew Bailey's suggested, and it is election time, so I wonder. But look, if they genuinely want to improve things and develop a policy, I'd love to sit down and talk to their team, about it, because I think there is a good deal of scope for simplifying and improving the regime. What we've got at the moment is really a high-level principles-based law. So it sets out some quite vague high-level standards that each business must meet. And that includes around, knowing your customer, getting the right due diligence, assessing the right risks, monitoring what your customer does when the, client of the law firm or a bank facility or all of those sort of things. Because it's a case where not everything is spelled out and prescribed in the law, there's a huge scope for the regulators to provide guidance and fill in the gaps really by their own views on certain things. And so they have a lot of guidance and risk assessment material. There's a wealth of information, that reporting entities need to dive into and try and keep on top of. And it's always changing too, which is a frustration. But I think there's a lot of things there that could be simplified. And some are just unnecessary. As I say, they're a little bit like tick-the-box kind of compliance. So let me give you one example, and this is just a sort of a top-of-the-head example. But so where people are following a particular process for identity verification, so there's a code of practice around that and an explanatory note as to how the code is worked. So all your reporting entity businesses, that's the term for regulated business, they're meant to be, or they don't have to, but they mostly follow this code. At some point along the way, the idea got large that there should be an exception process written into your policy. So follow the code, but you should have an exception process, which seems logical a lot of the time. There will be some people and some customers who turn up who don't have the right ID, but they're patently not a terrorist or a money launderer. But some small entities that I've dealt with said, well, we don't like exceptions process. We, a small business, we've got 4 or 5 staff. We only want to take on people who don't represent any risk. So we don't have an exception process. We train our staff that unfortunately they can't offer a service to somebody who can't provide the basic levels of ID. And then you get the regulator come along, as I've seen on a couple of occasions, and say, oh, well, no, you have to have an exceptions process. You're non-compliant or you're not following best practice if you don't have one. So, I've had a small business I worked with have to go and invent an exceptions process where they didn't really want it. It could be seen as watering down their high level of compliance, and they're probably never going to use it in reality. So that's an example of, just kind of following the playbook, tick the box regulation, unfortunately. And I think there's a little bit too much of that from time to time. So if we look at things in a more common sense way, there's a lot of scope for simplifying and saying, is that requirement really needed? Or maybe it's good and needed for some businesses, but this one-size-fits-all approach for all businesses is creating problems. So, yeah, there's a lot of scope to do that, but you don't want to lose the benefits of basically good standing in the international community. We're now seen by the FATF and others doing very well in this regard. And also you don't want to lose the information flow to the police or create loopholes that criminals are rich enough or cunning enough to exploit. If gangs are earning what seems to be happening in the methamphetamine trade, they'll go and pay advisors to find the loopholes. So it's always a balancing act when you say, oh, cut and slash and burn and the bonfire of policies and simplify things. You've got to be very careful what you're throwing out and what accidental loopholes you may create.
Well, it'll be interesting if we hear more about this nearer or indeed after the election.
Yeah, absolutely.
One of the other issues that comes up from time to time, and I guess it has done in the Ministry of Justice's statutory review, which you noted is still ongoing, is the supervisor model we have in New Zealand. So we have three of them. So we have the Reserve Bank, Financial Markets Authority, and the Department of Internal Affairs, each supervising different sections of the supervised or regulated, however you want to put it. Obviously, Australia has just one. They have a specific money laundering and financing of terrorism regulator, AUSTRAC. Is our three supervisor model working for us, and how does it compare to what we see across the Tasman?
Yeah, I'm not sure it's as best as it can be myself. I think I've been on record as being a bit critical of it in the past. It's three regulators, but then there's the police, the Financial Intelligence Unit. There's other interested agencies like Inland Revenue, New Zealand Customs for money going across borders. There's various, and then more recently MFAT with its international sanctions responsibilities. So there's actually a lot of government cooks at the oven there at the moment. My personal view is that we can and probably should simplify this. When you look at the Australian model, I'll explain it is a bit different, but personally, I think we could do with one single supervisor, and I think they should be in charge of sanctions probably as well, if we're going to do that effectively, because there's quite a lot of overlap and heavy lifting that is being done by the reporting entities already. The Ministry of Justice has looked at this, made recommendations that we keep it under review or do some further work on this, multiple agencies. What I see in practice is that there are inconsistencies because each of those agencies has come about historically doing different things. The only one that was built from the ground up like a proper regulator was the FMA, but now the Department of Internal Affairs is actually by far and away the largest because they have all the phase 2 businesses to deal with, and so they're responsible for far more entities than the others. And the Reserve Bank, although it's doing a great job with the legislative tools it has, it's not really been set up as a regulator in the past. It does other macroeconomic important jobs instead. So I think there's a lot of scope maybe to look into what we do with that. Australia has the single body of the regulator and also the police FIU within the system. Personally, I'm not convinced on that. I think we should. There might be good reasons to keep the police intelligence function as a standalone thing. The Aussies think it works for them, though, to have that. So I'd sort of suggest a variation on that if we got to it of a single supervisor, bring in the sanctions, but leave the police reporting lines and the privacy and the secrecy that needs to go around that, and the close linkages also with their asset recovery units. I'd probably leave that alone. That's the part of the system that's maybe working best at the moment. The other thing, touching on Australia, is they are currently stuck at a place where New Zealand was through the 5-7 years ago, where they haven't implemented their tranche 2. They haven't brought in the coverage yet for lawyers, real estate and accounting, and they are staring down the barrel of a FATF evaluation in a couple of years, probably end of 2025, which has been delayed a few times, so they've got more runway to play with, but they're facing real challenges in getting that done now. And all the, I've been in Australia a few times this year, and all the signs are with their Attorney General's Department that is now going to happen. It won't be delayed much longer. But how they work that, whether it will be the same as New Zealand, whether there's going to be inconsistencies, it remains to be seen. But I think that's definitely where they are heading. And that will expand the coverage very significantly, again, because there's a lot of small firms, accounting, lawyers, that it might be one or two partner firms or sole practitioners, real estate agents. They might have a central franchise, but with lots of tiny offices around the country. So some estimates are, for Australia, that could be a leap from about, I think, 10 or 11,000 reporting entities to 100,000 or more. So very significant question how you resource and scope for that. And I don't think New Zealand, the government didn't do a great job of that through 2017-18. They just got on and changed the law, but didn't give much thought to how on earth it was going to bed in and proper resource to make everyone understand it.
Yeah, well, it'll be interesting to watch that unfold in Australia then over the next couple of years. One of the other issues is, does this legislation cause financial exclusion problems or lead to financial exclusion problems, or perhaps the way banks and other businesses interpret it? And is that really a significant problem?
I think it is a significant problem, and it's probably one of the great failings of the AML system, really. It does some things very well, but it invites banks particularly to take a view that somebody is too high risk or might introduce a problem to the bank one day, and if that business or that account doesn't generate a lot of revenue for them, then do they really need them? So we've seen this phenomenon of debanking, de-risking over many years now. The first case I think I got involved with was about 2015, so it's not new, but it has been pretty brutal at times in New Zealand, and challenges that have been taken to it have largely not succeeded. So we've got a situation where you can understand the financial community's point of view that they say, well, there's freedom to contract with who we need, who we like, and if you're introducing a risk to us, then we're entitled to give you notice and terminate. But there's equally a point of view that in the modern environment, particularly with everything being done online, you really do need access to a bank account. It's almost, in some countries, treated as a necessity, nearly a human right, a right to have a bank account in some way. And the AML system has grappled with that in different ways and just not achieved a solution. So we still see waves of de-risking bank account closures. And look, if those parties are criminal, chances are they're not going away. They're just still there doing something outside the purview, the visibility of the banking system. So in fact, it makes the police job harder because they don't get the visibility in the reporting line of information either. And then you get these, need for operations to close down these people who have been driven underground, perhaps. So I think it's gone further than it needs to. I don't think it's always well balanced, and I don't think the regulators have stepped up and offered some genuine solutions. Or maybe it's a Ministry of Justice or MB policy solution, but we are stuck with it, and it's caused a lot of chaos over the years. Sometimes, genuinely dodgy operators should be run out of business, but equally, if you go too broad, you get a lot of small, family businesses that, rightly or wrongly, are now having to struggle by without access to a bank account just because they're in a particular sector the banks took a dislike to.
Look, it's a tricky issue, that one. Look, thanks a lot for that, Gary. It's Gary Hughes, who is a barrister, very experienced anti-money laundering lawyer, and chairs the AML and Sanctions Experts Committee at the International Bar Association. And I'm Gareth Thorne at interest.co.nz with another episode of our Of Interest podcast.